Hello guys, it's Arab the Plug here again, and you're welcome back to my YouTube channel. And in this video I'll be teaching you how to trade derivatives trading on BYBIT. Derivative trading is a kind of trading that we also call futures trading. On some other platforms you see it called futures trading, and on BYBIT and some other platforms you see it called derivative trading. Is a different kind of trading that is actually different from spot trading, and which I'll be explaining in this video. So if you are just joining this channel for the first time and you like content like this, ensure you subscribe and also ensure you hit the like button so that this video gets to as many people as possible and they also learn alongside you how they can trade derivative trading on BYBIT. So let's get right into the content and start with what is derivative trading before we go into details of how to do derivative trading on KuCoin. So first thing first, what is derivative trading? Derivatives or futures trading is when you buy or sell a derivative contract for the purpose of speculation. So it means that you are not actually buying or holding an asset like in spot trading. You are only buying for the purpose of speculation, which means you are either predicting the market is going to go up, which is what we call long trade, or you are predicting that the market is going to come down, which is called a short trade. So in derivative trading, we have two kinds of trading: a long trade, which is like a buy trade, and a short trade, which is like a sell trade. So when you say the market is going to long, it means you are predicting that that particular asset you are trading, be it BTC, Ethereum, Solana, or whatever you are trading, you are predicting that it's going to long, it's going to go up in the market. And once you place a derivative trade with this kind of prediction or analysis, and the market starts going long in your direction, you would be making money. And if the market does not go in your direction and the market starts going down or coming down, which is a layman language, if the market starts shorting, then you'll be losing money. Same as when you predict that the market is going to go down and going to short, and you are placing a short trade in the derivative market. If the market is going your direction, which means it's going short, then you'll be making money. But if the market does not go short and it starts going up, which is long, you'll be losing money. So derivative trading is not that you are buying an asset and you are holding it in your wallet, but rather you are placing a contract with your broker or your exchange, predicting that this market is going to go in a certain direction and putting in some kind of capital for you to be able to access the market, that you'll be able to place this trade and make money. Also, one of the reasons why derivative trading is different from spot trading is what we call leverage, which we also talk about when I'm doing the tutorial, when we get to the tutorial part of this video. Leverage is a kind of borrowed money that allows you to be able to maximize your profit when you are doing derivatives or futures trading. So when you have leverage, for example, if your trading capital is like $10, for example, you have leverage on your derivative trading platform, and you can use a leverage from like maybe 1x and more. For some assets, you can use up to 100x. For some, maybe 50 or 20x. So let's say, for example, you are using 10x leverage. It means the market or your broker or your exchange is going to give you access to capital worth 10 times the initial money you want to use to trade. So for example, if you are trading with $10, for example, and use 10x leverage, it means your broker or your exchange is going to give you access to trade with $100 of borrowed money. But with it, there are some things that will come with it as risk, which is what we call liquidation. Which means if you lose your capital to a certain exchange, you'll be liquidated, and the exchange is going to take back its borrowed money so that you don't lose its borrowed money alongside with your capital. So that is one of the risks that are involved in derivative trading. So you have to understand that in as much as derivative trading can help you maximize your profit, there is also risk attached to it when trading. That is why you are always advised to stay with a low leverage so that you are not borrowing too much. You know, when you borrow something, it's more of a debt. So now, having explained what derivative trading is, let's get right into this content and explain how you can do derivative trading on BYBIT. So now, this is the BYBIT interface that you can see. And as you can see this, we have, if you look down there, you will see that we have home page, we have market, we have derivative, we have trade, and we have assets. So if you want to trade derivative, you click on derivative. So once you click on it, you are going to have this page. So let me explain what is on this page. On this page, on the top side, you would see that you have USDT perpetual and USDC contract, inverse and option. USDT perpetual means you are trading derivative with USDT capital. USDC contract means you are trading with USDC contract or USDC capital. USDT and USDC are both a certain kind of stable coin that you can use to trade. But for me, I use USDT, and most of the traders also use USDT perpetual contracts. So I'll be teaching you with USDT perpetual because that's what I expect you as a beginner trader to use. So moving on, you see we have charts and trade, which means you can trade. This is where you trade, and this is where you look at the chart. You can analyze the market. If you already have learned how to do technical analysis, you can analyze the market using this particular platform here, which is the charting platform. If you want to learn how to do technical analysis like a pro, I have a full technical analysis course on my YouTube channel. You can find the link in the description below and watch that video. That video is going to teach you how to do technical analysis like a pro trader. So make sure you watch that, and let's continue. So this is the charting platform where you can analyze the market, and this is where you trade. That's the second thing. Then moving on, the third thing is that you have to make sure you have some money in your derivative wallet. You know, on BYBIT we have different kind of wallet. We have the spot wallet, we have the funding wallet, we have the unified trading, we have the derivative wallet. You have to make sure you have capital on your spot wallet. If you don't have capital on your spot wallet, you come back to your assets page and you click on transfer. Then you click on, for me, I have unified all my trading wallets, but for you, you will have derivative, you have funding and stuff like that. So for me, I'll just move from funding to my unified trading wallet. So I have some coins in my funding wallet, so I'm moving into my trading wallet. So because I have unified both my spot and derivative trading wallet to make it just one wallet. So I'll click on USDT, which is what I want to move. Then I will click on max because I want to move everything available here at the moment. So I'll click on max, and once I click on max, it's going to like transfer. You can see transfer successfully. So I will already have money in my wallet. You understand? So this is the page. This is the particular place where you see your balance on your derivative wallet. That is where it is being shown. So after you have had some funds in your derivative wallet, then you start trading. So how do you trade? The first thing that you choose what you want to trade. And how do you do that? You see where the arrow is showing now at the top left side of the page where I have BTC USDT. You click on that particular point and you choose whatever you want to trade. You see we have different options here: favorite, spot, perpetual. You make sure it is on perpetual because perpetual is what we are doing. It's what we call derivative trading as well. So if it's BTC, you can choose BTC. If it is Ethereum, you choose Ethereum. Solana, you can choose different assets that we have here on the derivative trading platform of BYBIT. So also you can also use this page and search. If you want to trade, let's say you want to trade AVAX, for example, you can search for AVAX USDT. You will see AVAX USDT perpetual and select it. Once you select it, you will have it right here. You understand? So any asset you want to select or you want to trade, you can just come here and select it. So I'll be returning it back to BTC because that is what I'll be using to teach you in this tutorial. So also, after selecting what you want to trade, then the next thing is to select your leverage. I explained further earlier that you have what we call leverage, which means a kind of borrowed money. And when you are trading on derivative, there are two different kinds of leverage. We have the cross margin and you have the isolated. So the cross margin, we have portfolio margin and we have isolated margin. So mostly I use isolated margin. I select isolated margin. And why do I do this? You can see details of the margin here. Isolated margin is a kind of margin that isolates your trading capital from the remaining balance on your wallet, which means that, for example, if you are trading futures now and you have, let's say, $500 in your wallet, and you are trading with, out of the $500, you enter a trade with $100. Isolated margin is only going to trade with the $100. And once you reach your liquidation price, which means a point where when you lose your money to that extent, you'll be liquidated and you will have lost all the capital in that particular trade, you'll be liquidated and the trade will be closed. But for cross margin, after you have lost that money, your broker is going to cross, or your exchange is going to cross into the remaining money in your wallet and start putting it into that trade. You understand? So I know that some experts use cross margin because they know that sometimes the market might just go against them and might start going back in their direction later. Though they will have lost a lot of money, but they may recover. But as a beginner trader, that is not much advisable. So when I click on this, I select isolated. So you can select cross if that is what you want to use to trade. You can see the requirement. You can see enough details about these margins. All right. So you can see enough details about these margins, and you can also select portfolio margin, which simply means that your assets would be hedged as a collateral, and you can also see the requirements for portfolio margin. So your asset will be hedged as a collateral, and you can also use USDT and USDC option for portfolio margin. But portfolio margin simply means that you are managing a lot of money. You are managing a huge portfolio, which is going to give you some advantages over people that are just trading for themselves. You understand? So for me, I trade for myself. But if you are managing, like maybe you are a hedge fund and you're managing millions of dollars of capital, you can use portfolio margin because of some of the features that it gives you that you do not have on the isolated and cross margin. So, but for you as a trader, as a beginner trader, you only want to use isolated margin. That is what I usually advise. So after that, after you have selected the kind of margin you want to use, then you select the leverage right here. So if you want to long, you can put it on 10x leverage or whatever leverage you want to use. But I usually advise between 5 to maximum of 10 or 15x. So for me, I used to trade on 10x to 15 to 20 sometimes, depending on the volatility of the market and depending on the analysis, depending on how much I want to risk in that trade. So you have to understand that you have to be able to identify how much risk you want to take, how much capital you have, and how much confirmation you have done for your analysis before you place a trade. So I actually advise between 5 to 10 or maximum of 15x leverage for beginners. So once you select your leverage, for example, you want to put it at maybe 10x, and this one at maybe 10x too, then you click OK save. So once you save that, whenever you open a trade, you can see success is going to like automate the leverage for you. But before I go into how to trade, let me quickly explain the right side of this screen that is showing the movement of some are in red, some are in green. That is what we call an order book. It is simply showing orders that people have placed in the market that are activating. Long trades are the green ones, and the one up, which is the red ones, are the short trade. And between the order books, we have the current price of BTC USDT on the derivative trading platform. So I hope you understand that. So now let's move to how to trade. So this is where you trade. This particular left side is where you trade. So if you want to trade, you just click on market. You can click on this place. I usually use market and limit order most of the times. Market order simply means you are buying at the current available price in the market. If the available price in the market at that time you are clicking on the buy is 63,600, that is the price the market is going to buy for you. But let's say you have analyzed the market and you want to use a limit order, which means you want to buy at a particular price. You want to buy or sell at a particular price that the market has not gotten to at that particular point. You can use limit order. So let's say you want to long BTC at 63,500. It's going to at 63,700, but you predict that the market is still going to drop to 63,500 before it starts going up. So you just click on limit, you choose limit, and then you put the limit price. What price do you want to buy that the price market has not reached yet? So you put 63.4, for example. You know, market has not reached 63.4, for example. Then how much USDT do you want to use to enter the trade? Let's say you want to use 25 USDT, for example. Then you can put your take profit price and stop loss here. You can put your take profit price. When do you want to take profit? Let's say 63,950, for example. It's going to tell you the amount of money you would have made, ROI you would have made, and let's say your stop loss will be 62,000, for example. That's just an example. You click on confirm, which means you will see that it has already registered that for you, which means when the price reach that take profit, immediately the profit will be taken, and once it reaches the stop loss, your losses will be cut immediately. Then you click on open long. But don't forget, this limit order of 18, this limit order of 18, if you use limit order, the market, an order will be open as a limit order, which means market has not reached that particular point. It is only when the market reaches that order price of 63,004 that this order will activate and start running. That is what the limit order is. Limit order simply means you are buying at a price that the market has not reached yet. So now let's use market order. Market order means you are buying immediately at the current market price. So let's say I want to use 25 USDT to open a long trade on Bitcoin at the current market price. Let's say I want to set my take profits to 64,000, for example. Or let me just say I want to take my take profit to 69,000 and my stop loss to 60, this particular price. I'll just click on confirm, and then I'll click on open trade, open long. Once I do that, the order would be, sorry, I open another limit order. So I'm supposed to open the market order. So let's say I want to open the market order and I open a long trade. You can see I already have the trade running. So that's the difference between market order and limit order. Limit order would be in orders which has not been opened yet. Market order would be an order that is already running. You will see that you have an unrealized P&L, which is like the profit and loss that you have not taken, that is currently running, and you will be seeing how much you are making. You will see the position size, you see your entry price, which is the price you enter the market. You see the mark price, which is the current price in the market, and you see your liquidation price. Liquidation price simply means that once the market go against you and it get to 57.6, you'll be liquidated out of the market and you will have lost all your capital you put into that trade. So that is what futures trading is all about. And also, if you want to click a short trade, for example, which means you are predicting the market is going to short, it's the same process. You put in the amount of capital you want to use to trade. So let's say, for example, you want to use 25 USDT, open short, which means you are predicting that the market is going to go down. You can see I have a long trade up and I have the short trade down. So also, you can close your trade by just clicking close by. And when your trade is running, you can also set take profit and stop loss after it is running. You can also adjust your take profit and stop loss as well when the trade is already running. You can use trailing stop, which means that if the market is already going in profit, you can move your profit such that the market will be your stop loss would be moving up as your profit keeps moving up, so that if the market starts reversing, it will not take you back to the beginning of the trade. So that is what trailing stop loss simply means. So, and you can close your trade by just clicking on close by and click on confirm. And once you do that, the trade will be closed. And if you have made profit, the profit will have added to your balance. So let's just close all it because this is just a tutorial. And also, your open orders, you can also cancel them as well. If you feel that the market is not going to that particular point, you can cancel your open order by just clicking on cancel. and it will be cancelled immediately, and you have your money back in your wallet. So that is how to trade uh derivative trading on BYBIT. I hope you got some value from this video. Ensure you hit the like button, ensure you subscribe to my channel, and also share with your friends. I will see you in the next one.